Oh, JEC says, anyone else know volume? I'm sorry. Um, okay, I'm going to go back through this again really quickly. Sorry about that. I think uh, the mute button was actually uh, pressed on my microphone. I didn't realize it, so I apologize. Um, all right, so let me go through this really quickly. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As a reminder, the focus of my presentation is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market, and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow with Spotgamma Hero to confirm my thesis and for setups for entries and exits. And this is something different. A lot of traders use technical analysis or fundamental analysis, and I'm taking a new approach here with positional analysis. And questions and comments are welcome. Please post your questions and comments in the Options-Doug chat channel in Discord and the chat in YouTube. And I will be watching both, and I will do my best to respond to your comments and answer your questions. And JEC's, thank you for the notification. Okay, so hopefully all is good now. All right, let's get started. And my agenda for today, what I want to talk about, first of all, I want to go through a clarification. There were a lot of questions yesterday about exactly what I'm trading, and I want to talk a little bit about that. So I want to do a clarification about what I'm doing here, what I'm trading, and then we'll go over the news briefly, the economic data coming out the rest of the week, as well as events, important events this week. Then we'll go through our positional analysis, and then finally we'll talk about some setups. So first of all, clarification. Okay, thank you, JEC. Timestamp it so yeah, we can bypass the 3 or 4 minutes of silence. Okay, so clarification. What I'm doing here is I'm using the options market to inform all of my trades. One of my key tenets for trading is that options trades and hedging flow, market maker hedging flow, are key drivers of price in many stocks and equity index futures. And this doesn't happen all day, every day, but I've seen enough to know that this is very often, more often than not, a key driver of order flow and price action. And one of the reasons is that market makers are in the options market all day long hedging, and they want to remain delta neutral, so they are doing whatever they need to do, buying or selling stock or futures to hedge their delta exposure. And again, this is a key driver of price action in many stocks and certainly the stocks that are on my watch list. Options trades are key drivers, some more than others, and then as well as futures. So when traders buy or sell options in SPY or SPX, for example, market makers hedge their delta exposure with ES futures. And the same for QQQ. When traders buy or sell puts and calls in QQQ, market makers are using NQ to hedge their delta exposure, NQ futures. So I use this information, again, for my planning and execution, whether I'm trading stock, shares of stock, or SPX options or futures. And there's a reason I choose to trade shares or futures, and I'll talk more about that. But you can use this information to trade any instrument that you want. And there are, again, advantages and disadvantages. The one big topic recently is the zero DTE options. And, again, there are advantages and disadvantages, and I'll talk more about that. And so again, my approach is about using options as a basis for trading, but not necessarily trading options only. So actually, let's take a look at an example now. And this is Tesla, and this is just something that just a simulated trade that I put on this morning. And for those of you who may not be familiar with this is a profit and loss diagram or a risk diagram. And I was just, this is just an example, not saying that I did this or this is what to do. As it turns out, it's not a good idea. So this is the blue line. This is the options of a 10 March 10, a call, 180 call that expires this Friday. So that's the next expiration for Tesla. So for Tesla and many other stocks, Apple and Nvidia, those stocks have options that expire every Friday. SPX, SPY, and QQQ have options that expire every day. So those are the actual zero DTE. But I just was looking at Tesla and saw this example. And the reason I don't like to do this, so again, the blue line is the profit and loss at expiration at the end of the day on Friday. And this purple line, so here's the blue line. That's the profit and loss at expiration. And then the purple line is the profit and loss diagram right now. And that will change during the day. And the thing to notice here is this theta. I don't know if everybody can see this. So I have taken price slices at the zero level, at the current level. That's this line right here. That's the current price level. And then at plus or minus $2 and plus or minus $5. So what this is showing, theta is that's showing how much, thanks JEC, so that points out this is how much you're losing in time value every day. So the middle value is at the current price. So right now, just holding this call, you're losing $104 per day is what it's showing right now. And that's something that I can't overcome. So that is, I was trained to be an option seller. So this is the penalty that you're paying for buying a buying a call or buying a put, and especially being wrong. You need to be right, and you need to be right fast for this to work out. So again, this is showing that the theta burn, this is the extrinsic value of that option, will lose, continue to lose value, and at Friday afternoon, this purple line will move down and become the blue line, and that's right at the end of the day on Friday. And so this option was $4. Oops, let me change that. So at the time that I put this on, again, this is just an example, the cost of that call was $4.70. So that means that not only do you need Tesla to increase to make money, but at expiration you need it to increase by at least $4.70 just to break even. Now that's the disadvantage, and that's the trouble that I have with buying a single option. The advantage, and JEC presented this yesterday, is especially with zero DTE options that are not expensive. Let's take a look at. I don't have any positions in QQQ, so let's take a look at QQQ. Take a look at an options chain here, and this is today. So here, for example, you're spending a lot less. You're risking a lot less. Let's say you want to buy an at-the-money call or put. You're going to be spending less than $1, so you're going to have less than $100 at risk. Okay, so that is, but the advantage is that's defined risk. If you buy this, let's say you buy this call for 67 cents, and so your risk is $67, and you could potentially make a lot of money if QQQ increases, and this shows you for every dollar that it moves higher. You can just look at the options chain, and these are further in the money. So if right away, very quickly, before that option decay catches up with you, let's say if price instantly jumps $2 from it's right around $2.96 now, jumps up $2, your call that you paid 67 cents for could be worth over $2. So that's the potential, and again, the risk is defined. You don't have to worry about it. You don't have to set a stop loss. You can just buy that option and set it and forget it, not worry about it. I would say that if I did this, I would be willing to lose $67 to make $200, $300, whatever your projection is. So that is why I prefer shares and other structures. So I want to clarify that again, just for those of you who may not have looked at a profit and loss diagram. This is the battle that you're facing when you're buying an option, is this theta burn, $104 a day to hold that option, and that that's again $104, and that will increase as time passes. So $104 today may be $150, $200 today. Okay, so let's go on now. Let's Let's talk about the news briefly. So, um, yesterday, Jerome Powell testified before I think it was the Senate Banking Committee, and he continued to testify today. And this is after yesterday. His testimony yesterday was hawkish, and the market interpreted it as hawkish. And notice the change in this is the Fed Watch tool from the CME, and the current target rate right now for the Fed funds rate is 450 to 475 basis points. Yesterday, the this was basically the other way around. So, and actually, this is showing the end of day yesterday. So let's look a week ago. So this is for a 25 basis point rate hike from 450 to 475 to 475 to 500. 1 week ago, that was 70%, and the chance of a 50 basis point hike shown here was about 30%. So 70%, 25 basis points, and 30% for a 50 basis point hike. And that has shifted dramatically. So now the chance of what the market is pricing for a 25 basis point hike is now 23.6%. And the expectation for a 50 basis point hike is 76%. So a dramatic shift in expectations for the Fed funds rate. Okay, and then finally the unemployment. The employment situation report is Friday again. All right, so let's take a look at charts. That's enough of that. Let's take a look at charts now. Let's go to Bookmap, and this is showing the S&P 500 futures ES. And before I dig into this chart, let's take a look at a larger time frame. Look at the levels on the charts. This is SPX, just showing price and levels, and these levels are from Spotgamma, and they're updated daily. This is provided in a Think script to Spotgamma subscribers, and this is showing the key levels. So there's the put wall, and I'll talk more about these levels in just a minute. And then up in this level, here's a combo level, the 4,000 key gamma strike, and then the 4,005 volatility trigger, and then way up above still is the 4,200 call wall. So those are some of the key levels that are in play for today. So that's a 20-day 1-hour chart, just showing a bigger picture view. And let's take a look now at a 1-day 1-minute chart, again in Thinkorswim, and this is just showing the levels that are in play for today in a little bit more closer view. So the things to notice, first of all, this SPX 3974 level that was noted as support in the Spotgamma AM Founders Note held as support at least initially this morning, and then the 4,000 level, this combo 3998, and then especially the 4,000 level was a resistance. So those are the levels that are in play for today. All right, let's go to Bookmap now. And I'm showing the same levels and more on my Bookmap chart. The first is the Spotgamma levels, and this is again from Spotgamma, the same levels in in Bookmap Cloud Notes. So these are updated automatically. And this is showing key SPX levels like the L2 4000, that's the SPX key gamma strike. And then the combo L4 level, that's a combination of SPY and SPX levels converted to an equivalent SPX number and then converted to an equivalent ES number. Right now, Spotgamma is using a 5-point difference between ES and SPX, and this morning I just did a quick calculation and it looked like it was about 2.5 points to me. So that is where I've drawn my levels in my column, my cloud notes. So I'm showing here the SPY 400 key gamma strike and volatility trigger, and then this is the 4000 level where I calculated it, and this is closer to the what we just saw on the SPX chart. Again, the SPX just touched that level, and here if you were actually looking at the 4005 level, price did not get up that high. So again, I'm using a 2.5 point difference, but we can see the same thing here in this chart. 4000 as resistance, and that's SPX 4000, and then SPX 3974, the level noted in the AM Founders Note, here acted as support, and it looks like price has breached that and may be trying to reverse higher at this point. All right, so that's the levels in play for the S&P 500 today. And one thing to note is this 3974. If you look at a traditional chart, this is the initial balance low, and there's a, when you look at those levels, there's often a reason for that. And actually, this is probably the 4000 is probably the initial balance high, and there's a reason for that. And here's the reason. So, you can use those levels or get to the underlying cause and reason that those levels are the low and high, and here it is. All right, so let's talk about shifts in levels. And there were just a few shifts in levels, just similar to the last couple days. Shifts in the volatility trigger and zero gamma levels. First of all, everything was down across the board today. Volatility triggers and zero gamma levels for SPX, SPY, and QQQ. And for SPX, volatility trigger dropped from 4,025 yesterday to 4,005 today. And then SPY volatility trigger dropped from 404 yesterday to 400 today. And QQQ, the volatility trigger, just had a minor drop from 301 yesterday to 300 today. And the volatility trigger is Spotgamma's proprietary gamma flip level, and that means that above that level, traders are, and looking at an index now, traders are short calls, market makers are long calls, and that is a positive gamma position. And in a positive gamma environment, they have to hedge against price to hedge their delta exposure, and that tends to subdue volatility in a positive gamma environment. And then on the other hand, below that level, traders are long puts, market makers are short puts, and that is a negative gamma position, and they have to sell futures to hedge their delta exposure as price drops, and then they can buy back their futures as price increases, and that tends to increase volatility in a negative gamma environment. All right, so again, the volatility triggers both for SPX SPY and QQQ all dropped, as well as the 0 gamma levels. Otherwise, there was no change in the put walls, call walls, or key gamma strikes. All right, let's take a look at the gamma levels charts now, and we can see where those levels come from. All right, so here's the S&P 500, and this is the SPX, and there's that 4,000 key gamma strike or absolute gamma strike, and it's been like that for quite a while. That's the strike with the largest absolute gamma, and then the put wall is the strike with and that can act as support, resistance, or a magnet for price. And then the put wall is at 3,900. That's the strike with the largest net negative gamma, and that can act as support for an index and sometimes for a stock, but I guess more often than not, especially with an index, SPX, SPY, QQQ, you expect that to act as support. Again, that's the strike with the largest net negative gamma. And then the call wall is up here at 4,200, the strike with the largest net positive gamma, and that can be expected to act as resistance. And notice that is that's pretty small, well out of play. And notice here the predominance of put gamma below the 4,000 level, and I forgot to mention that what I'm looking at here, this is the 0 line, and above that line, this is positive gamma or call gamma shown by the black bars, and put gamma or negative gamma below that line shown with the teal bars, and this is market maker's position. So that is SPX. Here's SPY, 400 key gamma strike, 390 is the put wall, and then the call wall remains at, let's see where it is, 408, which is a little bit unusual to be at not at a 5 or a 10. Anyway, a lot of put gamma at the 390 and 395 level, and there's a predominance of put gamma below the 400 level and call gamma above that level. And while we're on this page, let's take a look at the combo strikes, and this is combining SPX and SPY strikes and then converting that to an equivalent SPX number and showing put gamma or negative gamma below and call gamma or positive gamma above. And here, this is the right around this. This is 4002 and 4014, and this is the flip level, and it's showing 4006 there. Remember, the volatility trigger was at 4005. Put gamma below, call gamma above, but more put gamma below. And here's SPY showing the same thing. Combo strikes converted to an equivalent SPY number, and here's the gamma flip level at 400, which is also the key gamma strike. And again, notice the predominance of put gamma below. All right, let's take a look at the NASDAQ now. And for the NASDAQ, we'll just focus on QQQ. So for QQQ, 300 is the key gamma strike, or the absolute gamma strike. The put wall at 290, and that's pretty obvious, the strike with the largest net negative gamma. And then the call wall at 310. All right, let's take a look at data now. And I always like to take a look at gamma notional, and kudos to the guys in Discord for noticing this morning. JLA, Carmo Trades, JEC, and having a discussion about this, noticing the sharp increase or decrease in gamma. So big SPX, SPY, QQQ, gamma notional all became much more negative, and then recognizing the potential for a put Vanna rally given a spark to fuel a move higher. And so far today, whatever Powell said was not that spark. Okay, so gamma notional. This is market maker's position on the gamma curve. And this is SPX in the left column, SPY in the middle column, and QQQ on the far right column. And again, as I said, these levels did shift quite a bit more negative. So yesterday, SPX gamma notional was minus 444. Today it has shifted to minus 565. Yesterday, gamma notional for SPY was minus 1321, and today it has shifted quite a bit more negative to minus 2336. And then finally, QQQ gamma notional yesterday was minus 428. Today it's minus 704. And again, this is market makers on the position on the gamma curve. It's quite negative, indicating, and we just saw this in the gamma levels charts, that traders were long puts, market makers are short puts, and that puts them in a negative gamma environment, and they have to sell futures as price decreases to hedge their delta exposure. And then if price increases and implied volatility drops, they can buy back their short futures. So that is, that could potentially lead to a put Vanna rally. And let's take a look at the Vanna charts now. And this is a graphical illustration of that. This is for SPX, showing that as price decreases, that's on the horizontal axis, their delta notional will increase, that's in the vertical axis. And this indicates that market makers will need to sell futures to hedge their delta exposure as price drops. And the market makers want to remain delta neutral. And the green curve, that's the current expiration, is showing how their delta notional changes with changes in price and implied volatility. And that's the Vanna effect, the change in delta with a change in implied volatility. So that is SPX, again, negative gamma environment. Here's SPY. It's even steeper. Gamma notional is much more negative. And here's QQQ. So all showing the increase as price increases, as increase in delta notional as price decreases. And again, this is typical negative gamma environment, meaning market makers need to hedge with price to hedge their delta exposure. All right, then finally, this is my key gamma strike list, and I just do this as a quick reference. Note the changes in the key gamma strike for all the stocks on my watch list. The E column is showing the key gamma strike from the previous day, and then this is the current key gamma strike for today. I color code these: green if it increased, red if it decreased from the previous day. And one thing to note here is this is the VIX, and the current key gamma strike increased. So it looks like traders were buying calls in the VIX yesterday. Calls or call spreads. Okay, so that's my positional analysis. Given all this, I develop a thesis for the day. And normally, I would use this, and my thesis for the day would have been probably neutral to bearish. But with Powell speaking at 10 a.m., my thesis for the day would, just like yesterday, wait on Powell, see what he says, see how the market reacts. So with a big event like that, it's hard to, I think, at least for me, hard to develop a thesis based on information that is available before he speaks. All right, so let's take a look at some setups. And here, let's start with the S&P 500. So chop, and then finally prices moving lower. Let's take a look at something very interesting in Spotgamma Hero. And let's go back, let's take a look at this is the S&P 500. So this is a combined signal of SPX plus SPY, calls and puts, transactions, and if you trade the ES especially, or even if you trade SPY or SPX options, this is typically what you want to look at. This is the combined signal of SPX and SPY, and this is what is driving the S&P 500. So let's zoom in on this chart now. And the very interesting thing to point out, this is looking at all expirations, and we can change that so it's just looking at 0 DTE options. So this is options that expire today, and remember both SPX and SPY have options that expire today. I'm going to zoom in a little bit on the morning, and I posted this in Discord. Let's get in here. I'm going to increase this just a little bit to increase viewing. So this is showing that with these 0 DTE options, traders are fading the moves. So as price, let me zoom in just a little bit more, as price increases and they start taking negative delta positions in 0 DTE options. So notice here, price is moving up, and before or right as price is moving up, they start to take 0 DT negative delta positions with 0 DTE options. So in YouTube, Ali asked, what software are you using? I'm using two things. So I'm using Bookmap, and that's what we were just looking at. And now this is Spotgamma Hero. This is web-based, and it comes with a Spotgamma subscription. And this is showing, this is Hero, H-I-R-O, hedging impact of real-time options. And what this light blue, kind of blue-green line is showing is options trades and the market maker hedging flow. So the white line is price, and we can see as price is increasing, traders start fading that move. They're basically selling the high. Here this price moves down a little bit. They start to buy the low. And then as price increases, they start to sell the high. Price drops, and they start to buy. Price drops a little bit, buy again. And if you watch this carefully, this can provide a lead effect. So Ali says, don't know much about Hero. If you're interested, I suggest you go to the Spotgamma YouTube channel and search for videos about Hero. They have plenty. Right now, Hero is web-based only, and this is what I'm looking at. And you can also just look at their free resources in on the Spotgamma website, and you can read about Hero as well. the Spotgamma. Let me just type that in chat. Yes, Ali, I spelled it correctly. Okay, so this is showing the lead effect that these 0DT options have on price action in the S&P 500, and this type of action also tends to suppress volatility, trapping price in a range. And there are a couple of ways of approaching this. Actually, many ways to approach this. One is to follow them, to sell the highs and buy the lows once you establish that trading range for the day. And we saw when we looked at the Bookmap chart and the SPX chart and Thinkorswim, those levels were clearly 39.74 on the downside, which you could anticipate, as well as the 4,000 level above. Good levels to buy at 39.74 and sell at 4,000. Whether you're buying or selling SPX options, ES futures, SPY shares, SPY options, however you want to do it. Many ways to trade the S&P 500. And you can also use more complex option spreads. Let's say if price was down at the low, you could buy a 0 DTE butterfly at 4,000, for example, and have very low risk and an asymmetrical reward if price moved back up to that 4,000 level. And I tried that and we'll take a look at that in a minute. So anyway, this is what the 0 DTE options traders are doing. All right, let's change this back to look at all trades. So I thought that was interesting, and let's go take a look back at Bookmap now. So, we could be looking at that, again, that hero chart, and then knowing the range here, 39.74 to 4,000, trading up and down in this range. Let's just go back and take a look at hero and see what traders are doing now. And just looking at the total signal, so they, this shows the same thing as well, is that traders are taking positive delta positions at down just below that 39.74 level, and price is now starting to move higher. Let's go back to Bookmap now. And we can confirm that with order flow somewhat here. So more green dots, these are market buy orders coming in and helping to shift the move higher. And we can look back and see how order flow shifts from bearish to bullish just by looking at these volume dots. That's buy minus sell. So this is showing with these pink dots, there are more market sell orders than market buy orders, pushing price down. And then this reversal, let me change that. Notice the reversal here. I'm going to zoom in a bit on this. It's hard to see here. There's a blue number, 750. You can see the iceberg order coming in. So a stop run down to this level, buy iceberg comes in, and that's also confirmed by this light blue line. And then the shift in order flow from bearish down to that level, kind of a stop run down to that level, buy iceberg comes in, Order flow shifts to bullish, back up to the 4,000 level, chops around a little bit. Order flow shifts bearish again, and price moves down toward the 39.74 level. So you're confirming the signal in Hero with what you see in order flow here, knowing these levels, watching order flow, as well as the Hero signal. All right, let's take a look at some other setups. And remember, yesterday the semiconductors were strong. AMD and NVIDIA both are on my watch list. Let's go take a look at Hero. Take a look at AMD. And let's zoom in, separate out puts and calls. So the orange line shows calls, and a rising orange line means that traders are buying calls, not doing much with puts. At least in the morning. Let's zoom in on this. So looking at the morning here, traders are definitely buying calls, and that's driving price action. Let's go back to Bookmap. Nice uptrend, and notice the target at the 85 call wall. And yesterday, you can expect this to act as resistance. Yesterday, I did talk about a situation where a breach of this call wall can act as an accelerant and invoke dealer hedging, and it looks like it did a little bit here, but then price started to move lower as aggressive sellers come in. Again, look at the green dots. I mean the pink dots, I'm sorry. So the shift from green to pink, and price moves lower. But that was your first price target. Reversal at VWAP, reversal at the 84, and then this reversal here were all good entries up to the call wall target level. All right, the next setup was Meta. Let's go back to Hero. And notice how price has leveled off as Hero starts to drop, price moves slightly lower. And also as that call wall target was reached. Let's take a look at Meta. All right, Meta, there's a strong correlation between options trades, hedging flow, and price action. And in the case of Meta, traders were actually selling puts. That's shown by the rising blue line. All right, let's go take a look at Bookmap. And multiple long entries up to targets at the 184 liquidity and the 185 liquidity. Pretty choppy morning action, a lot of deep pullbacks. Looks like the pullbacks to VWAP were the best. And Microsoft. Pretty choppy action, wide range. Let's go take a look at Hero for Microsoft. And I'm going to zoom in on this. So that really confirming short entry in the morning long entry about 10-15, and then short entry. But I thought the best, given the most risk reward, was this setups here at these deep pullbacks as Hero continued to rise at a pretty steady line there. Let's go back and take a look at Bookmap. So there's those entries. If you didn't catch this first reversal, watching Hero steadily rising in these deep pullbacks. All right, let's take a look at NVIDIA. And let me, looks like there are a couple questions on YouTube. So Ollie asked, yes, you can trade crypto with Bookmap. This is not part of, not one of my topics. So all I will say is, yes, you can trade crypto with Bookmap. This is beyond the scope of my my webinar, but I suggest you go to the Bookmap website and just search for crypto. There are plenty of crypto traders. And there's a question, how can you use Bookmap to see if the move will push through at lows or highs? I'm not sure I understand that question. I don't have any specific answer for that, just watching order flow. I don't know. I'll have to think about that. That's something that again, just watch order flow. And we'll go back to ES here and see that here you were assuming this level would be support. Price broke through. There was here, just look at the clues, large stop orders, moving price through. If I expect this level to act as support, I'm going to look at, and that's how I would look at it, confirm that in order flow. So price continues lower and then starts making higher highs. So at this point, and also I'm looking at Hero and seeing the Hero line rise. So at this point, I'm assuming that this level, although price exceeded it a little bit, price did not rip lower. So I don't know if that answers your question or not, but you just have to watch order flow to confirm that. All right, the next one, we looked at Microsoft. Let's take a look at NVIDIA. And again, semiconductors are. So I'm looking at order flow right now. This is Bookmap, in case you're not familiar, and this is showing the order book, the history of orders. So this is the order book right here, current order book, COB, showing all the limit orders: buy below price, sell above, and then this heat map. For example, this shaded area is showing the history of sell orders at the 240 level. So liquidity levels, so this is kind of getting at Bookmap basics, which is kind of beyond or a different topic than what I want to talk about. I suggest you go to the Bookmap YouTube channel and watch some of the basic webinars, attend the advanced webinars, ask Bruce at Bookmap, ask these questions. This is Pro Trader. This week, Bookmap is having a Pro Trader webinar series. Next week, the regular series will resume, and Bruce is the I guess the director of education, and he conducts an advanced webinar every day at 10 a.m. Eastern Time. They're also recorded and available on the Bookmap YouTube channel, and he talks about that in more detail. So I look at these liquidity levels first of all as a target. So looking at this morning, I see price rising. We'll look at Hero in a minute. A couple of pullbacks to VWAP, and this liquidity level up above at a big round number, 240. I look at that as a target. Price seeks liquidity. All right, let's go take a look at Hero now. So that's Microsoft. Let's go to NVIDIA. And very strong confirmation, correlation between options trades, hedging flow, and price action. All right, let's go back and take a look at Bookmap. And notice the fairly deep pullbacks, but pretty much a steady uptrend in Hero, especially until about 11 a.m. All right, so let's go back to Bookmap now. So there's NVIDIA. Hero was strong, rising pullbacks to VWAP and round number levels with the liquidity target up above at 240 and 241. Well, let's go take a look at SPY now. And I have the levels, SPX and SPY levels marked on my chart here. This is my Cloud Notes column. So here, for example, there's the 4,000 SPX, 4,000 key gamma strike, the 39.98 combo 4 level, and then this is showing SPY levels. And notice that SPY did breach the lower edge of the expected move for the week, and this is something that's based on the options market, and this is for the week. So this is the lower edge of the expected move for the week, and now price is moving back above that level. And you can see that as well as in this chart, that the SPX 3974 and the SPY 397 level were in play, and then the SPX 4000 level above. Support and resistance. And then finally, let's take a look at Tesla. So there's Tesla, strong drop in the morning. Let's go take a look at Hero. Notice the weak Hero signal here. Right here, this is comparing the strength of the Hero signal in the last 30-day range. That's shown by the entire length of the slider, and then the colored portion is the strength of the Hero signal in the last 5 days. So the Hero signal for Tesla is weaker than it has been, and as weak as it has been in the last 30 days, and weaker than it has been in the last 5 days. And up until, let's just say 1:30, 2 o'clock, it has been generally trending down. Let's just zoom in here. So confirmed, Hero confirmed the short in the morning. A little bit of a long. I guess that's what I was looking at when I put that simulated call trade on, and then trending down. All right, let's go. Other thing that I want to take a look at is Tesla and Equity Hub, and this is looking at the key daily levels for the last 10 days, and here I can see that there has been no increase or decrease in the key gamma strike, and from yesterday to today a slight drop in the hedge wall, and then for the last 6-7 days the call wall has dropped down. So it dropped a couple of days ago down from 220 down to 200, and then today the put wall dropped from 190 to 180. So overall I take that as bearish for Tesla. So this is doing further investigation. Let's say you were planning to trade Tesla today. If you traded Tesla every day, you might want to do some investigation here, and you can see that traders are not anticipating higher prices, and in fact looking and anticipating potentially lower prices, with that put wall moving lower, the hedge wall moving lower, and again no increase in the key gamma strike or the call wall, and the slight shift lower in the call wall over the last few days. And again, I would interpret that as bullish, and just even though there's no change in the key gamma strike, further investigation shows that some of these other levels were dropping. So now let's go to Bookmap, and let's zoom. Actually, I'm going to zoom in this like this. And so there's the move down as Hero was dropping. Options traders were taking negative delta positions, and then there's a clear target at the 180 put wall. Whoops. Clear target here at the 180 put wall. Sorry about that. Wrong tool. Okay, the 180 put wall, notice all the liquidity there and the absorption at that level. Okay, so that's Tesla. Multiple, notice it's all below VWAP, multiple short entries. Reversal at 184. Other short entries here down to the 180 put wall. And if you were fast enough, you could have caught that one as well. Okay, let's just wrap it up here. Let's go back and let's go to Thinkorswim and take a look and see how our long Tesla call is doing. And it looks like we have recovered a little bit. So that's the advantage of just putting on a kind of a set it and forget it long call here, not worrying its defined risk. So now it looks like we are up 27.50 so far for the day. Still, we're experiencing that theta burn of almost $98 a day. And one other thing that I was looking at today was another way to trade zero DTE, looking especially at a trading range for the day, and I think I mentioned this, a butterfly. So down at the 39.74 low, you could say, all right, I think price is going to go back up to 4,000 today. So this is expiration 8 March, and this is a butterfly. So this is just a simulated trade showing paying 25 cents for that. So you're paying $25 to potentially make. You're certainly never going to make $400 on this, but if it's certainly possible to make a couple $100 on this. So this blue line is showing at expiration. The purple line is showing right now. So right now this position is up $5. So not enough to cost your cover your commissions. SPX is quite expensive to trade. So if you do this every day, your broker's going to love you. But it is, if you catch a big winner every now and then, you could do well with this strategy. And this is something that I would consider very low risk, high potential reward. It's a low probability. But notice how this curve, this profit and loss diagram, bends for a butterfly. And even though this is just 5 wide, short the 4,000 calls and then long the 39.95 and 4,000 calls. So this is an expected move butterfly, and again asymmetrical reward to risk, and you can make profit. You make a profit on this even if price does not make it within the blue lines fast enough. Okay, so just another way of looking at this. That's all I had for today, and I want to thank you for your questions and comments, and thanks for watching, and I will see you tomorrow. Thanks again. Bye.